Alright, so again, good afternoon everyone. I'm Steve Beilby with Alpha Shark, and we've got a brand new workshop that we're going to be presenting in a few weeks. It's going to be something that I've called Trading on the Edge. Now, it's something that we demonstrated in our trade room over the past week. It's basically looking for areas of support and resistance that offer the best reward to risk ratios in your trading, so that you're not putting on a trade somewhere in between one of these levels and not getting the best trade that you can get. Alright. First off, before we kind of get too far into this thing, we always have to present the risk disclaimer. Now again, you're not going to learn the technique here. This is a presentation to steer you to the workshop, which will be presented in a few weeks. This is just an introduction today. So I'll try to keep this much less than an hour, because I've got to get into the trade room for Alpha Shark and do my portion of the day. So what we've got here then, of course, anytime you're trading, make sure that you're not taking capital that you need to pay the house payment, the car payment, the alimony payment, whatever. This has to be risk capital. Lawyers want us to say this so that we don't get ourselves in trouble. Anything here is for educational purposes only. These are not trade recommendations, but we will be using some examples and stuff, so you'll be able to see what might look like good trades. But again, they're not trade recommendations. It's just to learn. Okay, got that? All right. Who am I? For those of you who are brand new in these weekly webinars that we present on Friday afternoons and don't know who I am, I'm with Alpha Shark, and I worked for IBM for 24 years as a computer engineer, and I had some fantastic assignments when I worked there. I absolutely loved doing the critical situations management. But all good things must come to an end, and it just happened that my number came up for a layoff and I was gone. So I didn't get my 30 years in. So I started a new career in trading, pretty much self-taught. Started learning stocks, options. Then I learned, and that was the year 2002, 2003 that I was learning those. In 2005 I learned how to trade futures. In 2006 I learned how to trade Forex. So I kind of considered myself adept at a lot of different things. And over those years, because that's been, 16 years now that I've been trading, over that time, I've come up with a lot of my own personal strategies. And we do sell two of them on the Alpha Shark website, one called Catapult, one called Recoil. I ran another trade room for a number of years, and now I'm with Alpha Shark. I was a customer of Alpha Shark for a number of years, and figure they got a lot of good stuff. That's why I was a customer, and so when they invited me to join staff and become a moderator in the trade room, I accepted. So that's who I am. So taking a look at this overview, and I don't really, well, in a sense I can call it a strategy. It's a little bit different because you're not using an indicator per se. Not something that you can order up on Thinkorswim or on Ninja and say, okay, use this to trade by. It's going to become a little bit more involved as far as you developing where, or mapping out where these zones of support and resistance are. Okay? And so that's why it's a workshop, because we need to teach you where those lines ought to be drawn, and the lines, not just specific lines, but actually zones. So they'll be like rectangles basically, and you need to know where to draw those to give yourself the best trades. Okay? And so in the workshop we'll teach you all about that. We'll show you plenty of examples, and I'll even give you some of those examples today. Now, this works no matter what time frame you're using. It works on any tradable instrument. But what we're going to teach you is that by varying the time frames that you're using, you're going to have some zones of support or resistance stronger than others. And usually that's a general rule in the fact that the longer the time frame, In other words, daily charts, weekly charts, 4-hour charts usually give you better zones of support and resistance. They're much stronger because of the amount of volume involved versus, say, hourly charts, 5-minute charts, 1-minute charts, what have you. But the techniques will work on any time frame that we have. Okay? Why do we do this? Because it offers the best chance for risk reward. You're going to be putting your trades up against almost like a wall. It's like backing yourself up against a wall that you can't go any further on. And it's just on the other side of that wall that you're placing your stop. But by facing forward, you're going to see so much reward opportunity that it's almost ridiculous what you can come up with for risk to reward opportunities. Because the whole idea is we as traders have to be able to accept losses. But isn't it a lot nicer to take a bunch of 50-cent losses and get $5 rewards than it is taking $2 losses to try and achieve $3 rewards? We like that first better, and that's why using these zones of resistance, I'll call them edges, is what we're going to be using, and we'll teach you how to do that in this particular workshop. Not in this one today, but the one that will be scheduled. Okay? So that's what we're looking for. Now there's all kinds of extra little goodies, wave counts and everything else that will be added that you'll see in the workshop, probably not here. Okay? Like I said, it works on any time frame. Works on any tradable instrument. So if you're a Forex trader, or if you're a futures trader, or if you're a stock and options trader, this technique will apply to any of them. Equally good on anything. Okay? You don't have to worry about a platform. So this is not something that, well, we've got it for Thinkorswim, but we don't have it yet for TradeStation. Doesn't even apply. Any platform that you can draw a line on. That's all you need. Okay? Now there are some platforms that kind of give you a little bit better expertise in being able to draw rectangles, and that's what we prefer. And so if your platform offers that, great. If it doesn't, you'll probably just have to go with straight trend lines. Okay? Hal, no, this is not related to Catapult. If you choose to use Catapult with it, that's fine. If you choose to use it with Recoil, that's fine. Okay? Nancy, I see your question. It says, do you have any idea yet when you are going to present your Mastery Earnings course? That I have no clue on. Okay? I believe that's something that Andrew is doing. It's not under my guise. Okay? So it's something you'll probably, if you really want to, you can send a note to support@alphashark.com, and that'll get to Raphael, and he can consult with Andrew and maybe get you an answer. Okay, Nancy? So if you really want to try and nail down a date on something like that, send it to support@alphashark.com. Okay? Alright, so basic setup, we're just outlining zones of support, zones of resistance. We're looking at previous highs, lows, price rejection at those levels, things like that. And deciding where we want to then have the patience to wait for price to come into that zone. Sometimes we wait several days to get the best trade. But that's usually for people who are trading off of, say 4-hour charts, daily charts, something like that. Okay, so they have that patience built in because they're already trading long frame charts. If you're a 5-minute trader and you're waiting 3 days, well, guess what? Move on to some other tradable instrument. Okay, don't sit on that one. Let's say you're trying to get into Apple, and we've got a zone projected for Apple. but it might be several days before you get in it. Well, don't just sit there and watch the screen day in and day out for 3 days waiting for Apple to get there. Go trade something else. Well, that's the beauty of this thing, is there's always something to trade with 7,200 stocks out there, about 40 different Forex pairs, about another 50 different primary commodities, things that get traded. There's always something to trade. Okay. All right, so a lot of what we do is connecting body to wick, outlining the zones, putting our stops just beyond the zones. Trade entries are going to be anywhere within the zone. Again, a lot of these are initial charts for the workshop. They'll get filled in with a lot more detail. This is just a very introductory taking a look at some of this stuff. And this doesn't even apply anymore. So I got a bunch of charts in here that are from another thing. Oh, okay. There's the initial look. That is not right. Let's go into and edit that. It's not recoil. It's not recoil. So let's edit that right away. And then we'll get into some examples here, okay? The name of the website that he just gave me. Where did I put it? No, it's not that one. There it is. Looks like this, only the name's not there. I think it was Trade the Edge. Let me check. No, that looks too long. It's got to be in my email somewhere. Bear with me. Oh, it's on the edge. On the edge. Okay. Whoops. Okay, let's just take the whole thing in. Okay, so now we can turn that back into the slideshow. With me for one quick moment. So let's erase that, type over it. On the edge. And there it is. Okay, so here's what you're going to get. And you're going to like this. Okay, so the workshop is on June 2nd. It will be recorded in case you can't make it. Time to be determined, because I believe Brian at Alpha Shark also has a webinar on that same time. Okay, so or around that morning. So we'll figure this out which time, but you'll get a notice as to when it's actually happening. You'll also get another live in the market mentoring session. It'll be scheduled the week of June 11th. It'll also be recorded. You're also, this is the really, really, really good part, you're going to get a free indicator. You're going to get the recoil indicator, which is my latest indicator that I put out there for Alpha Shark. Okay. It has a value of $9.99. If you do one of the members only webinars, you can get it for $2.99. Okay. But today only, if you sign up for the workshop, you're going to get the recoil indicator for free. So it's basically like getting the workshop for free. Because the workshop's only $149 today. Okay? And so when you go to alphashark.com on the edge, you'll see that's priced today for $149, not the normal $9.99. That'll be after June sometime. It'll be priced at $9.99. Up until then, we're giving you the opportunity to sign up for $149. But today is when you get the recoil indicator. I don't know how much longer Andrew will allow this one to stick around as part of the freebies that you get for signing up for the workshop. So if you're really interested, sign up now. Like I said, you've got several weeks before it happens. So you got time to plan your calendar and get ready for it and everything like that. But you don't want to miss your chance, because I don't know if he's going to cut off the number of people that can attend or what. Okay? So make sure you get signed up today, especially to get the recoil indicator. Now, when you get the recoil indicator, there will be instructions how to install it on Thinkorswim or on TradingView. This one is platform dependent right now. We don't have it for TradeStation. We don't have it for Ninja 8. Okay? But it's there free today. If you got Thinkorswim or TradingView, you can apply it. It will have instructions on how to install it, how to use it. However, there will be separate mentoring for this one as well. Okay, so we will be having some more sales presentations to sell this one, and on those it'll be at the normal $2.99 price. For members only. So don't miss your chance. If you want to get this indicator anyway, get in now while you can get it for the $149 price for the workshop. Okay? Alright, so I'll show you an example of recoil, and I'll show you a little bit about how we're actually doing these zones of support and resistance. So that's what's next. I got to be sensitive to time, because I probably maybe only got 30 more minutes. And then I got to cut out of here so that I'm ready for the trade room this afternoon. Okay? Jerry says he's not kidding. The price always goes up. It does. It does. So you don't want to miss your chance to get them at these cheap rates. Like I said, we're presenting this in June. So probably sometime after that, he's going to raise this price to $9.99. Okay, you go to the website alphashark.com and look at all of the classes that are offered, all of the indicators that are there for sale, and there are no discounts on price. You only get them by coming to these sales presentations. Okay, so let's take this out of the picture, folks. And let's slide this one over so it's not cluttering up the screen. And here we go. Alright. This is an example of recoil, except it's got one extra thing in here, and it's this the Keltner channels. That's not part of recoil. So let me... Oh, I've got this set up for all of the sectors. Alright, so let's take that down. And let's put this on a real recoil setup here. Recoil stocks. Sorry, Nancy. There's a lot of stuff that we got to get through to all the screens. Well, NVIDIA had earnings. So let's just take a look at the aftermarket. This is a basic example of what recoil looks like. Okay, it's got a confirming indicator called the RSI at a special length. And then what we're doing is we're using moving averages to try and figure out where we want to make trades. So this thing will actually set up and give you examples using green arrows for major trades to the upside, or blue arrows for using the minor moving averages for trade signals. It'll then use magenta arrows for where it's telling you to get short, okay, like up here. And it'll use red arrows when it's used in conjunction with a major moving average. So you've got red ones right here. So on a 5-minute chart with recoil, you can see there were multiple trades. Now overnight, most of us aren't trading the overnight session, so we would probably take that out. By not showing the extended hours. Okay. By doing that, it's going to alter your moving averages somewhat. So if you're a fan of using the overnight session to try and figure out where the next day is going to start, leave them on there. The arrows are still valid. You just use them at the opening of the day. Okay? But this is an example of what's happening with NVIDIA today. All right? It gave you a short trade right here at about 9:25 this morning. And where that initiated at around 256.70 until it finally closed at 255.88, there was about an 80-cent downward trade intraday. We're again 5 minutes, so 80 cents might not sound like a lot for NVIDIA, but it is significant if you're doing intraday trades. The only thing that it has signaled today is short trades. Getting short here, getting short there, getting short there. And you can see that one even succeeded for an even bigger amount, in the amount of almost $3. Okay? So if you start adding each one of these up for what you could have made, and if you had taken every one of those trades, you'd probably be up about $5 or $6 right now. Okay? And multiply that by the number of shares you would have traded, and you can see. So recoil is there. Yesterday it was giving signals here, long trades, in the order of maybe 258.90 up to, by the end of the day, in the 260s. So there was $1's worth. And it gives you, if you've missed a trade and you see the signal come back on once again, go ahead and take the signal again if you missed it the first time. Okay? There is a scanner that will be available probably within a week for this one. So it's going to be a complete system. All right. Now that's just recoil. That's the free indicator that you get if you sign up for the workshop today. What are we referring to when we talk about these zones of support and resistance? Okay. Well, for those of you, I'll get out of stocks. Let's just go to a futures chart, just to show you how these things work on other types of things. Let's take a look at oil. Oil's had a lot of movement lately. And you'll actually see I've already got some of these zones drawn in. But they're not extended out. I should be extending this out to show you that this thing has continued. Easiest way for me to do that is to simply say, oops, not that. Take this itself and edit the properties and take it out 2 more days. So let's take it out to top left, no, bottom right. What's today, the 11th? There. Okay. So I can extend these out. And now what you're seeing is every time oil comes and touches that level, that's a good buy point. Okay. So if I didn't worry about all of these arrows from recoil telling you almost the same thing, get long, get long, get long, you'll see that there are, if I took recoil out of there and just left price on here, I can certainly do that. Take recoil out of the picture, cleans up the chart just a bit. Okay. Now every time oil came into one of these zones, knowing that this is a support zone, you'd buy. Came down again, buy. Came down again, more than likely you're buying. Now the reason we keep our stops very, very tight is just in case you know, that because we would probably be setting our stops. If your lower edge of your edge is 70, 73, more than likely you'd give it 20, 25 cents on the oil contract to be below there. So you're probably looking at stops somewhere in this range right down here. Okay, they're not hit here, they're not hit there, where they're not hit there, and yet in most cases this thing is bouncing. But should it not bounce, in other words, like this one is doing, this may be the one that actually comes through. Okay, matter of fact, give me a moment, I need to make a change to a trade. Aha, yes, I'm glad I slotted that. This helped me in my own trading today. Okay. The pits just closed. It's 1:30. The pits just closed. So this thing, oil has made a strong move down into pit closure here. Anyway, let's say you got stopped out right here, out of the 25 cents. Okay. Well, you had. I don't think I can. Yeah, there it goes. Okay. So a 25-cent stop that was never hit here. What's your reward? About $1. 4-to-1 risk reward. Okay. Another 25-cent stop. What was your reward coming out of this box? About 75 cents. Okay. Now you get in it again, let's say, but this time you're stopped out, so you're out to 25 cents. Okay. Well, you can see that there will be losses from time to time when the market decides to change its mind. But it respects these resistance levels very, very often. Let me show you one further back on oil as well, but it lasted for several days. So with that, I'm going to turn this over to a 1-hour chart. And I know I've got a lot of stuff on these charts, but pull that down, pull this over. Oh, okay, I see a lot of stuff going on. Alright, well, it's basically within this time frame right here is what I wanted to show you. Okay, the number of times that it hit those levels, and then it's also this one down here, and I don't have it drawn in, but it's very easy for me to do so. All I got to do is change my drawing tool to rectangle. Okay, and then I'm just simply going to connect wicks and bodies. And there's my zone, my zone of support. Bought here, profit. Bought here, profit. Bought here, profit. Bought there, profit. Bought there, profit. Bought there, huge profit. Okay, this was over the course of 2 weeks, that every time we came within that zone we could have traded it for profit. And did it ever exit out the bottom? No. Okay, so this is kind of what we're doing now. We do this not only for oil but for ES, for all the commodities, you know, but I typically like to use it a lot on ES and oil. If you want to see an ES chart, we can simply do that. I believe the chart I have on ES, yeah, I've got a lot of Fibonacci levels and stuff on here. I've already got one of my zones drawn here, and you can see the actual switch. Okay, this was resistance, and look how much it was able to take. But this time we revisited, and now it's switching bias. This is another good example of keeping your stops tight enough. Why? Because when it decides to change bias, because the volume isn't great enough to keep it as resistance anymore. Hang on a second while okay, then you can see what happens. You would have been stopped out as it came through on the other side. But now you're going to use this as support. And so as I expand this out, and you can see the numbers of times that it's come back into play, you've gotten several trades to the long side. So buying here, buying here. Now and then of course the latest one was, it's got a wick in there, but where are we at? We're above because of the doji candlestick right there. 3 separate instances, off of a 1-hour chart of where you could be buying this thing, and it's holding as support now. Okay. Robert, that's going to be part of the workshop. Robert's question is, this shows your entries. Where do you determine your exit? And this is going to be different than the other indicators like Catapult, where Catapult shows you 2 target levels to take your profits. And of course the new stuff that Andrew has been talking about using standard deviation ATR. We're going to actually implement standard deviation ATR. But it will not be shown as part of this because it's a workshop. And so if you want to work with those indicators, you can get the indicator and then use those to help determine where your targets are going to be. Okay, so as part of the workshop, we will incorporate not only that, but other methods of determining where your stops and exits and entries and all that stuff should be. All right, so it'll all be part of the workshop. Okay. So give me some examples that you've got that you are interested in, either intraday right now. I can show you the euro in case you're a forex trader, for any of those of you out there. Okay. And you can kind of see what's been happening. A very, very, very long-term trend down in the euro. Okay. And we would have probably drawn, on the grand scale of things, we probably would have drawn this several times for some levels here, some edges. Latest edge, of course, is down here. So it's very easy to kind of map that one out as far as where we would place that. It's not clicking. There we go. Okay. But there would have been others as well. Okay. So what you can see from here is the fact that, let's just now change that back into something that we can manipulate here. Okay. And so now what you can see is that a former edge that worked once, came down, worked once, came down, got stopped out that time. Okay. But now that it's re-entered and gone through it, now what do you have? Well, now you've got a zone of support. So you've got all of these trades coming down here subsequently that can be used. Okay. Similarly, you're going to have other edges as well. On its way down, it established these. So on its way back, they're already there, ready for you to use. Okay. So on this one, you'd have gotten stopped out, but now you're going to be using it as levels of support in order to establish even further trades to the upside. That's the euro. We've done them for the pound. We've done them for a lot of them. Doyle wants to look at ZB. Certainly. So this is the 30-year bond. And in the grand scheme of things, I've still got it on a 1-hour chart. I'm going to expand this out a little bit. And then, whoops, I need to put that in hand mode in order to pull it back. And I think I lost it, didn't I? Okay, let's reestablish this on a... There we go. And let's do this. Let's just take a look at this much of the chart. Okay. Okay. So there's a former edge. You can see we got through it. Most people will probably have been stopped out right there. Okay. But as we come back through, now you're setting it up to buy. And then what you're doing here is you get a second buy. Another one right there. So it's very easy to set up these levels. And we'll teach you, make sure that you're doing it in the right places. Because not every place that's got bodies and wicks and everything else is going to be the right place to do it. Okay. We're also going to teach you wave counting, and we're going to teach you different time frames that these are loaded on. In other words, you can see I've got a daily chart right now. Let's say I turn it into an hourly chart. Okay. So now I've got something in which I can see these various levels. But let's say I'm not willing to wait, a couple of weeks for it to enter. Is there some trade I can do in the meantime? And very definitely, using hourly charts, I can definitely see more of those. So I can set up another one of these, but since it's on a different time frame, I can color it differently and tell myself that this is something that I want to trade off of an hourly chart versus a daily chart, or maybe a 15-minute chart or something like that. All I'm simply doing is just changing the color so I recognize it that this is off of a different time frame that I'm interested in. Okay. And if you bring this down from an hourly chart to say a 15-minute chart or a 5-minute chart or something like that, you'll be able to repeat the process, fractally, so that you can find other levels of trade. So that if you're, very quick in and out, 1 minute, 5-minute trader or something like that, you'll be able to establish levels very similar to what you're doing here. Okay. Let me back up on a couple questions. Robert wants to see SPY and Tony wants to see ES. Well, they're essentially the same. One's just the ETF for the other. So let's just show you SPY. Okay. And I've got it on a 5-minute chart. So let's bring this down. And let's just look at, oops, I didn't mean to do that. Let's try that again. Let's look at this much of the chart. Ah, it's doing it to me again. There. Okay. All right. So as your day is starting out, and let's say you're a 5-minute trader, more than likely you'd be looking at yesterday, and we'll teach this in the workshop, of course, but we'd probably be looking at yesterday and be drawing our tool in this fashion so that we've got something established for today. Whoa. What just happened? Did I lose? Oh no, it's over here. Okay. No wonder. I lost visibility. Let's come back and then reestablish the 5-day. And then take a look at this much of the chart. Okay. And then redraw some stuff here. I think I cut off a little bit too much of the chart, but there is another edge there that we can use. Okay, this is a closer in edge. You can see, I still want to pull this over if I can. Yeah, see here's the edge that I would have drawn earlier, but there's a well-established very small minute chart that we could use, and you can see as we came down here earlier today, there was a good buy. Okay. ES is going to be very, very similar. It's just that you're going to have other hours that aren't visible here. And I did actually already show ES. I had some lines drawn on the ES chart, and this is what we've already got here. So, what else? Questions coming in. I gotta be sensitive to time on these. Yeah, Hal, too bad that you got disconnected and stuff like that, but this thing is recorded, so if you really, really need to see some of that, you can probably request a recording. I'll get it sent to Raphael, and he'll make it available probably on Monday. Like I said, though, if you're really interested, I mean, if you need to see that in order to cinch your mind on getting it, and still want to get that recoil indicator, I guess I'll let you make up your mind, how badly you want it. But the offer for the recoil indicator is just today, as far as I understand. So looked at ZB. So we did CL, we did Spider, we did ES, we did ZB. What? I don't understand the question, Chris. Is Jonathan around? Who's Jonathan? And via Renko. I don't know what you're asking with that question. Okay. All right. Maybe you're confusing this with a crypto webinar from last week. This is not a repeat of that one, whatever, from last week. This is a brand new one. Again, okay, so here's what I'm going to do, folks, so I can be sensitive to time. You've seen some examples, okay, on both the recoil indicator and using these zones. Okay, so I'll get back to the statement of the offer so that you understand everything that you're getting. For anybody who came late or something and did not see this earlier. Okay, so you're getting the workshop. It will be recorded in case you have to miss it. The workshop probably will be less than 2 hours for sure. It won't go like that 2.5 hours that Andrew did just the other Saturday on unusual options activity. It will be less than 2 hours. We will have time to talk a little bit about recoil in there, so it won't be too bad. Okay, so you'll have the workshop itself, and if you have to miss, you'll get the recording. We have a live in the market mentoring session sometime during the week of June 11th. That'll also be recorded. Okay, you're getting today only the free recoil indicator. Okay, that normally even for members only that would cost $2.99. So it's essentially just being given away for free. Okay, so the workshop itself is normally going to be $9.99 after June. But today you can get in for $149. Okay, so you're going to alphashark.com. On the edge, I will type that into the chat box so that you can just do a click on it. Okay, so in your chat box, you can now see what you need to click on, if that's easier for you than just typing that in. When you get there, it's going to look like this. Okay. So it'll be a web page that will say trading on the edge. It's already got the recoil indicator there, priced at 0. Trading on the edge is 149. Just fill out your name, address, give it a credit card number. That'll be processed. You'll get an email invite to the workshop. You'll also be sent an email that has the details about the recoil indicator so that you can install it on Thinkorswim or TradingView. And it gives you a little bit about usage on it for recoil indicator. And then, of course, like I said, you'll get a separate email for trading on the edge with a date to invite you and all that stuff. All right. Arnold says, how do you determine how strong of a support or resistance area? We'll teach that in the workshop. A couple different ways. Any other questions, folks? I'm here to entertain a few questions for the next couple of minutes before I got to shut this down. Don't miss your chance, because this will be a good one. Now, it's possible I may be presenting this again Tuesday night in case you missed anything. I don't know whether recoil is going to be part of it to be free, so don't miss your chance now. Entries and exits, we will cover those. Yes, Hal. They'll be part of the workshop. Anything else? Oh, thank you, Hal. Appreciate it. Anyone else? All right. Sensing none, I'm going to close down this. Actually, I'll just stop the recording because